Welcome back to the show. Making his international debut here, we've got Mr. Tim Gregory, Chief Investment Manager for Vermeer Investment Management Ltd. Very good morning to you, Tim.
Morning, Nick.
Right, let's kick off with some headlines. You're a fund manager. Sort of the headlines: brace for autumn storms. Is the stock market heading for a crash? Yet another U-turn from May. How many can the Tories bear? Nuclear reaction. Front page of City AM this morning. As a fund manager looking after a portfolio, how do you factor in this geopolitical, political valuations? Okay, do you sleep at night?
Well, I'm not a great sleeper at the best of times, and obviously markets have been pretty tricky of late, so it's probably made that a little bit worse. But we try to take a long-term view. We ran our portfolio pretty fully invested most of the early part of this year, but more recently we have taken a slightly more tactical position. In the sense we're running a little bit more cash. We bought some gold equity as a tactical position earlier this year. So all the tension with North Korea, concerns about the budget ceiling in the US, all the problems that they've been having with Mr. Trump, who of course, when he was elected, everyone was really excited about new policies.
Yep.
But are those policies actually going to come through now? We're going to see lower taxation. And of course, equities have had a phenomenal run for a long period of time. So a lot of people are saying valuations are stretched, which I think relative to history in many respects they are. But, 10-year US Treasuries still only yield 2.1%. 10-year UK gilts yield 1. The return on cash is nothing virtually. So equities in that sense still, for long-term investors, I would say are a better place to invest. But of course, in the short term, it's difficult to circumvent all these sort of negative things that are going on. And after such a good run, we're sort of anticipating a sort of flattish, perhaps modestly lower period, and of course you never know what comes from left field that that can send markets a bit more aggressively down, and that, and we have to sort of watch for that every day, really.
Well, Bank of America Merrill Lynch suggested everything was in place for an autumn fall correction crash. When somebody like that makes the headlines, okay, does that put fear in you, or do you think that this is just headlines per se?
Well, as I said, markets have had a great run, and September statistically is a difficult month for equities relative to all the others. History tells you, and of course, October 1987 we had the big market setback then. So this has been a tricky month and a tricky period for equities in the past. We try not to get too carried away about that. As I said, we have moved our portfolio, what I would say, tactically more defensively, but we don't really react to sort of headlines like that per se. Obviously, we make our own judgments, and at the moment we are modestly a bit more in cash than we have been, and being quite careful after such a good run for the market.
Tim, thank you very much indeed.